Hey there, everyone. This is Jonathan Gengle, Financial Advisor with Bayntree Wealth Advisors. Hopefully, everything is starting off well for you and everybody is healthy. I know there's a lot going on out there, but today we are going to go through our first 401k participant educational webinar of the year, and it is looking forward through 2022 and some simple planning action items. A lot of times we can get caught up in minutia and a lot of fine details. And with financial planning, it is important really to try and keep things simple, have a broad view and long view perspective as well. So we're going to go through some of those items and strategies that may be applicable for your own situation moving through this year. As always, your team at Bayntree dedicated to providing you guidance and assistance, not only on the 401k planning side, but in all aspects of financial and retirement planning, what the impact is to you on in terms of specifics in your own situation, how you can utilize the tools set before you to benefit you long term as well. So please don't hesitate to contact us. So our agenda for today, we're going to look at signing up, increasing contribution limits within your employer-sponsored retirement plans, go through some of the new numbers, the updates for contribution limits for this year, differences between contributions in terms of lump sum or percentage-based salary deferral within a 401k plan, savers credit, what it is, if it's applicable to you to utilize and how it may benefit you, and then also looking at some rollovers. So we'll get right into it with that first agenda item. So signing up for obviously is probably the most important step to beginning the savings for your retirement, for your future. So if you haven't signed up, if you're eligible, please do so. If you need help with that process or even need some assistance in determining if you're eligible or not, please call us. We can help you verify that information and give you some further instruction on how to get signed up to your plan. And then electing your contributions. So whether you're just signing up for the first time or if you've already been participating in the plan, it is always good to evaluate how much you think you can and should be contributing to the 401k plan. So for instance, if you have already been participating and you got a raise in 2022 and you haven't adjusted your contribution, you might want to consider doing that if it's allowable within your budget. There are options as well for automatic increases, which is a good way to kind of take the guesswork out of that, where you can say, I'd like to make a certain percentage contribution, and I would like that contribution to increase by 1% every year for 5 years. So you are keeping up with, if you forget about going in there to check it, but just have it automatically keeping up with any pay raises you're making. So again, very important to evaluate just an overall budget, see where your income, your expenses, your assets, your liabilities lie in terms of an overall balance sheet and what you should be allocating to short-term savings and then also longer-term savings vehicles for retirement within your 401k plan. So really good way to just give you a general overview of where you stand in terms of your planning. So evaluating your contributions. Also taking advantage, so if you did get a pay raise, taking advantage of higher contribution limits as well. So these just came out before the end of the year. 2021, if you were under 50, you could defer up to $19,500 of your salary. Make that as a contribution over the course of the year into your 401k plan. That's been increased by $1,000 to $20,500 for 2022. So again, that's a little bit more incentive to save some more into the plan if you're able to max it out. If you are over the age of 50, the contribution limit, so the catch-up contribution limit is still at $6,500. So total you could get into your plan for the year would be $27,000 for 2022. So just important to know that there have been some updates on those contribution limits. So looking then at contributions and doing a lump sum or a percentage of income, what's best for you may be different for somebody else, but more often than not, using a percentage of income is almost always what we would recommend. And that's what we generally would recommend for budgeting strategies as well. If you know that 10 or 15% of your income is earmarked to go towards your retirement savings. As your income changes and hopefully increases over time, that percentage will not necessarily change, but the dollar amount going into that savings strategy will increase over time and help you keep up with maintaining your lifestyle. Obviously, using a 401k plan or any other type of retirement savings vehicle, we will always have to contend with contribution limits. So that may be a limiting factor, but generally using a percentage of your overall income is a good way to give you a good measuring stick with how much your contributions should be, and it will help you from a budgeting standpoint in all other areas of planning as well. One area that you may want to consider looking at, and not everybody is eligible for this, but is looking at the Savers Credit. It's worth up to $1,000 for single filer or $2,000 for joint filers. So you can look up if you Google Savers Credit, you can look on the IRS website and see what the income thresholds are. But to be eligible, you have to be 18 or older, not a full-time student, and not a dependent on any. So, like if your parents are claiming you as dependent on their tax return, you can't have that in order to be eligible. And then there's income threshold. So again, you probably would want to reference the IRS website that goes through those income thresholds. But let's just say, the job market has been pretty interesting over the last couple of years, but maybe you are in a household filing jointly, and either you or your partner or your spouse, whatever the situation may be, maybe you lost a job for half of the year and your income was lower last year than you're anticipating for this year. You could potentially take advantage of the Savers Credit, which is I'm contributing to these retirement accounts and I am getting a deduction off of my adjusted gross income, but I am also getting a credit against my taxes. So whether you owe or if you're getting a refund, it would just add on to that. It's really better than getting that off the top deduction. You could be eligible for some money on the table there in terms of that Savers Credit. So if you have questions on that and whether it applies to you, please feel free to reach out to us and we can do a quick analysis and determine if you're able to take advantage of that. Rollovers. So if you made any employment changes throughout the year or even a long time ago and didn't do anything with that old 401k account, you might want to evaluate what makes sense moving forward, whether it be rolling it into your current plan, looking at IRA options, ideally not taking the withdrawal because of the tax ramifications there. But again, depending on your needs and your situation, there are a number of options that are available to you. And again, that's what we're here for, is to help you determine what those options are, what's best for your situation in terms of coordinating that planning. Does it make sense to consolidate? Do you have different goals for the different buckets of retirement accounts? How does that then dictate or influence how you invest that money as well? Those are all considerations that you should make, but more often than not, it's going to make sense to put a coordinated plan instead of just leaving alone or forgetting about old accounts. So if you think you might have an old 401k out there, it would be important to track it down. Might not be utilizing that money as effectively as it could if you at least coordinate that in with all of your planning. So as always, if you have questions on any of these topics or anything else, please reach out to us. We're here to assist you. And we're looking forward to a prosperous and successful 2022. So with that, I'll let you go, and we'll see you on the next 401k educational webinar. Take care.